Hey traders, what is up? It is time for another pre-market analysis video where we look for swing trade setups and potential day trade setups coming into the new week. Today we are going to be looking at gold, EURUSD, and SPX 500. Okay, so let's look at EURUSD first. We are on the 4-hour chart, but the very first thing I like to do is I like to go over to software called the Edge Finder, and what this is economic data reporting software where it takes all of the most recent economic data for the asset and gives it a bullish or a bearish score. So we know fundamentally what's going on behind the scenes, and it can really give us an edge in our directional bias for our trading. So if we're looking at EURUSD, we can see that it's currently a +8, which is very bullish. But if we go to the top trade setups history here, we can see that over the last month, it's just been bullish with no sign of weakness whatsoever. And I will leave this software link in the bio if you're interested in getting it for yourself. Okay, so let's go back to the chart here, and we can see that, yeah, all month or the last several weeks, it's just been pumping just because fundamentally it's been so strong. So our bias is definitely to go long here. Now, the question is, since it's been pumping all last week, where would be a nice high value price point to enter this trade? And I can see a few things when I'm initially doing my analysis here on the 4-hour. Now there's a very obvious key level right here, okay? And that's because we had two rejections there. That was previous resistance, and then it became support, right? So this price point is actually very interesting for buyers and sellers. So that's if that's interesting for big institutions to buy or sell at, then it can be interesting for us as well. Okay, so that's kind of how my brain works. But the problem with this price point is that it is so far down there. Like, price would really have to dump for us to get there. So there's another method that I like to use when we have a really strong run in one direction. I take the Fibonacci retracement and I'll mark the low to the high of the move. And now we can start to see, okay, is there a key level here that I could really get into? And usually that's between the 0.5 and the 0.382, or that could be the 0.618. And right here, the 0.382 level is beautiful because you can see that we had a consolidation range just bouncing off that level over and over again. So that could be a beautiful price point to actually wait to go long on. If it were to come back down, we could set up a nice swing trade, and it would look something like this. If I go long here, boom. And the one thing we can do for our stop loss level on the swing trades is on the 4-hour chart, just pull up the ATR, which is the average true range, and we can see the average price movement for the last 14 4-hour candles, which is about 30 pips on the low side and about 40 pips on the high side. So anywhere between 30 and 40 pips could be a beautiful level to set a stop loss. Now, let's see what that looks like here. So what is 40 pips? Let's see. Yeah, it could be somewhere around here. So I think like a 30 pip move would be a reasonable stop loss for this asset. It'll give it a little bit of breathing room in case this wants to stretch out. The only thing I don't like about this situation is, the fact that the 50 Fibonacci level is below my stop loss. So if you want to be extremely conservative and set up more of a position trade, you could set up like a 60 pip stop loss, right? And really defend yourself against that, potential pullback through this high value key level between the 50 and the 382. And for the take profit, what you can do is you can pretty much just set it as high as you want, and you can trail this thing by 30 pips every time price moves 30 pips in your favor. That's how I would play this one, because we don't know. There's really nothing to the left here that would act as resistance, as you can see. So I think that's a really good call, just to trail the profit and see how far this thing can pump, just because it's so economically bullish. So that is my breakdown for the swing trade side of things on EURUSD. Let's clear that. Well, let's actually go down to the 1-hour chart. Okay, and for a day trade setup, regarding the PFK alpha strategy, we are looking for momentum on the 1-hour chart, and currently we don't really have any conclusive bias on the 1-hour. It's kind of ranging back and forth here. So until this gains some momentum where it starts to kind of look like this, right? This is the 9 and the 21, or this is the 9 and the 20 EMA. Once it starts looking like that, or once it starts looking like this here, where we have a clear momentum-based bias, we can't really get a day trade set up here. So what I want to wait is, let's just wait for the week to play out and see where the momentum lies, and then we can kind of follow that momentum with the PFK alpha strategy. And obviously it would be nice if we can go long with these day trades because the momentum is so bearish, but at the same time we do want to see price sell off a little bit and come down into this key level as well. So this is one of those situations where you really want to just wait, sit on your hands, don't trade this thing until we get some kind of new price action structure forming. So we can revisit that in my live sessions in the Discord that I'll be doing. Okay, so you can drop by there and we can check it out then. Okay, so that's it for EURUSD. The most valuable price point here is 1.16 that I really like. So watch that level, set an alert on your trading view. You can set a line there and you can actually right click that and set an alert. Okay, so I would do that. That way you know if it does hit. Let's look at gold next. Okay, so we're going to go over to the 4-hour chart on gold. And the first thing we want to do is go back to the edge finder. And for some reason, I didn't see gold on the home page here. So I'm not sure why. So what I can do is we can go to top setup trade history and we can just search for it. Like say USD, maybe gold. There we go. There. Okay. All right. So gold has been bullish fundamentally all month. And I think that makes sense, right? But recently, because of the NFP that came out on Thursday, it came out Thursday because it was July 4th on Friday, it has dropped to a -3, which is super interesting. It is the first time in the month that it has a negative economic score based off the edge finder. So that is something that we really need to keep watch for. So if we go back to the chart here, I'm just going to close this. We have a key level on the 4-hour, and this is the one I marked last analysis week. I marked this key level and I said, hey, let's set up a long swing trade at 3250 because that is a beautiful level. You can go look at that video if you want. And as soon as it touched that level, it shot up $100. So if anyone got that trade because of me, let me know, because that was a beautiful trade. A lot of profit to be made there, like almost no pullback on the move. So if you were trailing that, that would have been a 4-to-1 easy. But now what we're looking at is some bearish fundamental bias. So we're not really looking to go long on any swing trade setups here. So the question is, where should we short gold? And that is a great question. Now there's a few levels here that I'm looking at. And the very first one is an interesting one. And the reason why it's so interesting is because it's a psychological price point, which is 3,400, okay? And trading these psychological price points can be very effective, especially on gold, because 3,400 is that clean number right there, right? So we have this zone, and we can see that previously we've gotten really close to it and have just gotten rejected. So another thing you could do is you could actually go a little bit down to be conservative, just so you don't miss the dump if it does climb back up there when it happens. Now, there's a few issues we have with this, okay? And the first one is price is actually currently $55 away from this key level psychological price point. Now, because gold seems so economically bearish, there is a chance that it won't have enough steam to reach that to find sellers, okay? So another key level we can look at is the previous week high, right? If we really want to look for a good zone to short gold, and that would be right here around 3364. Now that could be a bit more reasonable to look to short gold. And you could maybe do 2 attempts. You could attempt this level, and if it fails, you can attempt this level. And either way, we have potential to catch this really strong move, because really there's nothing stopping gold from just dumping all the way down to potentially here, right? And I have to zoom way out to see that, which is, you know, it could be 3150. It could even dump to, because the economics are not in favor of gold right now. Now, obviously, that could change if some world events play out over the next week or so. We don't know, but still, it's just we have to go with the bias that we have for the current information that we have access to. Okay, so what I would do is I would set a limit order here at around 33.66. You go bit 33.65 might be nice, and if that fails, you could attempt 3,400, or you could go 33.95. And for the stop loss, we could do a little something like this. Bang. And once again, pull up the ATR, right? And we're looking at about between $15 and $20 is the range of the 4-hour ATR, which is quite nice. So $15 and $20 stop loss is perfect. So I'll just do 15, because if we break this previous week high, you know, we're likely going to visit that. So there's no reason to go more than that. And then once again, you can trail this thing by $10 to $15 all the way down to here, or you could just set up a trade like that and see how it goes, right? You could hold that thing if you have the willpower to. Okay, so that is my analysis for the swing trade on gold. These key levels are all very relevant. The only other key level we could consider is that, once again, that Fibonacci, right? We just pull that right here, and we can see that there is a 618 level that might be pretty relevant. That is close to the previous week high. So our stop loss actually is on the other side of that. So that acts as a bit of a defense. So that's why I kind of like that. Okay, so that's something to be aware of. But for a day trading perspective, let's look at the 1 hour chart. And we can see on gold that we had a lot of bearish momentum, which would be great for the PFK alpha strategy. A lot of short opportunities there. And we can see that it pulled back a bit. Now it's crossed over bearish again. So depending on how the week plays out, we do actually want to kind of see some buyers come in just to create that weekly top candle before it continues down. Otherwise, it gets kind of risky if there's no weekly top wick on that bearish candle. There's a high chance that it needs to come up reverse to make that weekly candle wick, right? So we kind of want to see this thing come up a little bit, roll over, and then we can start to look for shorts on gold for the PFK alpha system. But currently right now, you know, if we're looking at this thing last week, we could have done a couple shorts on Friday. Let's take a look at what that would look like. So if I go back to the 1 hour chart, and if I mark this from where it crossed over, that's where it became kind of a short bias. I don't like this giant bullish candle, but we wouldn't want to trade that anyway on a Friday before the weekend. So let's just take a look at this. And the only opportunity we really had for a bearish crossover was about right there for the PFK alpha. And if you guys don't know the PFK alpha strategy, there will be a tutorial video on it, but this is what we talk about all the time in the live Discord. Okay, so this was the signal to go short. But obviously better to avoid a trade like this on a Friday before the weekend. Okay, so coming into the week, we'll have to see how some price action plays out. But gold is kind of also in this, you know, this little range where we need some momentum in one direction or the other before we can determine a day trading buy. So we're just going to sit on our hands a little bit, and we will take a look at that a couple days into the week. Okay. All right, SPX 500 is last. Let's go back to the 4 hour chart. And you can see here that this thing has been going to the moon. As I said in my last analysis video, it was looking very bullish. We were looking for a high value entry point, and we are still looking for an entry point because this thing keeps pumping. So what can we do here? So the very first thing we want to do is just, let's look at the edge finder once again. I'll go to top setups. And if we look at SPX, where is it? Where is it? SPX. Is it on here? Yes, it's right here. Okay, so SPX is a 6, which is still pretty bullish. Anything over a 4 is considered bullish. Okay, even a 4 is kind of bullish, but anything over a 4 is clearly bullish. So if we go to the history and we go to SPX, we can see that this thing has been very stable and bullish for the last month. Okay, so that doesn't look like anything's alarming. It's not choppy, it's not changing. So we can say, yeah, I think it's going to have a long bullish bias coming into this week. So the question is, where would we want to enter a trade for the week? Okay, so if I'm looking at this thing for key levels, obviously where we broke out that all-time high, we can see right there, that could be a nice key level. But once again, it is so far away. If I'm looking at the movement that would take, it would be a 3% drop on the S&P 500 just to get in. So another thing we can do, once again, we can take a look at the retracement Fibonacci levels, and this one could be pretty clean. So what I like is somewhere between the 382 and 5 in here somewhere, right? That's kind of the retracement I would be looking for to go long with these buyers. Okay, so we want to see price come down here and there. And I do like the 50 a little bit more because it's more of a pullback and we had consolidation on that level. But it's hard to time perfectly sometimes. So a good way to kind of counter that is to set up your buy stop somewhere in between the two worlds, right? So we could go something like this, long here, right? And once again, let's pull up the ATR, and we are about 19. Is that right? 19 to 30. Let's say 20 to 30. Okay, 20 to 30. Is that right? That seems really aggressive. Something doesn't seem right with that. 20 to 30. There's no way, right? I'm not sure why, but that's not sitting right with me. So I would do more of a, if we're just looking at these candles, I would do, because we're on the 4 hour. Yeah, that makes sense, right? I would do like a stop loss below the 5, the 50. And yeah, I guess that's a 30. So we're kind of in range. So that's not too bad. But still, I feel like that's a bit tight just by looking at the price action. So maybe I go like 40, right? Sometimes you just have to be a bit intuitive when you're trading like that. If something feels off, then maybe it is. So I go like a $40 stop loss there. And then what we could do here is we could target like this previous all-time high, right? And then we get out of that swing trade, or you can trail this thing as well by let's say $20. So every time price goes $20 in your favor, move the stop loss behind the price, $20. Okay, and then you could trail that thing if it's pumping, because if you did that in this situation, right, that would have worked out very nicely for you, because I don't think your stop loss would have triggered until Friday. So there you go. Yeah, so for the SPX, that's kind of the only analysis I have for this, because there's really nothing else here. I'm not going to short it, right? And this level is so far down there. So I think the only key level that I would consider entering in the market is this right here. And that is a 1.9% shift in price. So it's not unreasonable, but it's still significant. Okay. And as for the day trade setup for this, let's go down to the 1 hour chart. And this is actually kind of nice, kind of interesting, because we do have clear bearish momentum, and we would expect price to potentially maybe create a weekly wick there and work its way down to this pullback zone. So because we have a short bias here on the hourly, right, the 9 and the 20 EMAs have crossed, on the day trade on the 5-minute charts, we are actually looking for shorts currently. So we had a signal to go short right here. That's the most recent one with the PFK Alpha strategy. Okay. And that was obviously on a Friday, so it's irrelevant. You're not going to take that trade like 15 minutes before the market closes on Friday. But if price were to like open up and kind of bounce around here and then roll over, signaling a short, and we're still bearish on this hourly, right? Sorry, that's a lot of lines. That looks really bad. Then we can look for a nice short, because once again, we don't really have a whole lot to the left that might be too much resistance for us to catch a few good day trades going short, right? Just because the fundamental bias is long doesn't mean we can't find shorting opportunities, right? So If this thing does continue down, we'll look at it early in the week. Maybe we'll look at it during the live on Tuesday, and we'll see if there's any good setups that might be coming. But keep an eye on this one because this one could be very good to go short on. And if it does roll over and go short, setup for this one would kind of look like this, a day trade setup. We go short. Let's say price kind of comes up a little bit, and then those EMAs roll over, and we can go short somewhere around there. And if we pull up the one hour ATR, right? Pull up the 1 hour ATR, and that's what we want to use for the day trade range. So that is around, I would say around $10. A $10 move is going to be what we're going for the stop loss. So let's go back to the 5 minutes, see what that looks like here. $10, right? Yeah. So go like that. And then once again, you can do a 1-to-1, I think. Let's see. This one might be better, like a little bit higher. Yeah, between a 1-to-1 and a 1 to 1.5. It's kind of like up to your judgment. Or you could target a 1-to-2 and then just trail the stop every time price goes $10 in your favor and see how far you can make it, right? So that could be a good opportunity there. Okay, so yeah, that's it for my analysis for the week. Hopefully that's helpful. My VIP Discord is coming out in a little over a week, and this is what we're going to be doing with the members in the live. We're going to be doing, bull market analysis. We're going to be doing day trade breakdowns, strategy breakdowns, all the time in the Discord. And obviously we're going to be talking about prop firm related stuff, how to get funded, how to navigate prop firms, how to hit payouts, all of that good stuff. So I will leave the link in the description to my VIP waitlist. I will also leave the link to the Edge Finder, and all the links you could possibly ever want in your whole life will be in the description. Thanks for watching. I'll see you guys next week.